The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Thursday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN. We have an action-packed morning this morning. Thanks for kicking things off right here with me on the Morning Market Kickoff. You got markets right now in negative territory, but we're off of the lows. Made it about 5 a.m. We have producer prices this morning actually decreasing more than expected. That number at 8:30. You see the market's trading up a bit. We have final demand for goods. We'll get into that as well. But nonetheless, S&P's negative by 18 or 0.3% right now, 58.90. NASDAQ 100. We're negative by 0.4% or 90 points at 21,304. Dow, negative 146 points or 0.3%, 41,971. And the Russell, barely in the red by 1 point, 2,081. Crude, pulling back. Talk about a little volatility, right? Crude. How about a $3.50 move from where we were Tuesday to the lows overnight early this morning of 60.50. We're up near $62 in crude. Let's jump to notes and bonds, the dollar, then we'll get to gold. The 10-year, little volatility in that PPI number as well. And so let's jump to PPI before we jump to yields. Producer prices fall unexpectedly as margins decline. So the number there, 0.5% decrease in the PPI, followed no change in March. They were looking for a 0.2% gain, so quite a miss, right? The core number, excluding food and energy, declined 0.4%. The most since 2015. Now, like I was talking about, goods prices excluding food and energy increased 0.4% in April. Final demand services prices decreased 0.7%. The most in data going back to 2009. Over 40% of the decrease attributed to declines in margins for machinery and vehicle wholesaling. Margins. Right? Now, is that going to feed through to the PCE consumers? Well, we'll see. We got a lot to talk about, but nonetheless, so you see that number. There's going to be some volatility at 8:30, which is why I bring it up. We have higher price and lower yield coming at you on the heels of that number right now, and it's quite a move. You're talking about a full, 7, 8 ticks just like that? Not dramatic from where we've been, but 4.48, I guess nothing too crazy. We're sitting right near 4.5%. There's your daily. So a little bit of a bounce, but nonetheless coming into those April 11th lows 2 days after we got the pause. So there's your yield sitting at about 4.5%. You jump over to the dollar, 100.65 right now on the dollar and gold. A little bit of a lift off the lows. We back it up to a 5-minute chart right now. Yeah, a little bit of a lift indeed. We're going again. You're up by $70 off the lows right now. $31.94 from $31.23 on that gold contract. All right, let's jump around. So Dick's Sporting Goods, they're going to be buying Foot Locker for a couple $2 billion. $2.4 billion to be exact. That's Foot Locker, $12.87 yesterday. How about a nice 100% gain by the open? Yeah, $2.4 billion is how they're doing it. $24 in cash is the number. I knew we were close. $24 is in cash. We're almost right there. Market pricing in 99-point-something% chance this deal gets done. 66% premium. And this is how they calculate it. And, it's 100% premium almost. Not. 12 would be 100, right? Nonetheless, 66% premium of Foot Locker's average share price over the last 60 days. Well, it's been a tough 60 to 90 days for Foot Locker, man, right? You're basically saying that they're getting Foot Locker where it was trading at in December. Not a bad premium. Now things have changed, deteriorated. Foot Locker, you're going to double. And as is usually the case, the company doing the acquiring, you're going to drop like a stone. Giving back all the gains you got on the China reprieve, you're actually going to be below where we were when you got the news of China for a company like Dick's from 190 and change to 225. They're spending $2.4 billion. They're going to keep the name. So they're going to keep Foot Locker. They're going to operate it as a separate company. They're going to obviously have some synergies there. And Foot Locker needs some management, and Dick's has some great management. But it is remarkable in terms of those companies, how they operate. Foot Locker, 2,400 retail stores in 20 countries. I think Dick's is at about 800 stores, right? But much different plans in terms of store plans, all of that. Nonetheless, that deal's getting done. Dick's, you're trading down $25 on the open at 186, and it's not stopping. All right, so we have that deal going on. You jump over to Walmart with their numbers this morning, a little bit lower on the retail sales number. Yeah, they got a conference call going on as well. But you see the initial spike, decent numbers for Walmart. The headline? Well, yeah, we have that they're talking prices, that's for sure. But they do beat. Sales rise 4.5%. Now, they pulled the guidance on earnings. Okay, that is what they did do. Lack of clarity. And check this one out, right? This is the CFO of Walmart. I mean, imagine executives saying this. If you've not already seen it, it's happening in May, and then it will become more pronounced. Price rises. That I feel like Walmart should pull back on that type of a stark statement from the CFO. All right, you get down further in this. This is the same CFO. It's a challenging environment to operate in retail right now with prices going up like this. There really hasn't been a historical precedent or prices going up this high. And here's the part to hang your hat on. The magnitude of the tariff increases, though, are so large that retailers can't absorb these by themselves. So there is going to be an effect here, man. That is Walmart. Now, I'm talking economy-wide on those, okay, because what they also say, and listen, Walmart's a great company long-term. Boy, you've had quite a run-up. There have been articles written recently that the PE multiples on Walmart are pushing tech stock status, 20-plus, easy. Forward earnings, forward PE for a company like Walmart when you've really accelerated. So, yes, expectations sky high. But what they talk about in here is that, guess what? Things are going to be tough. And who's going to benefit? Walmart's going to benefit. Okay, they're better positioned to weather the range of challenges, and they're going to try and absorb those clients when everybody else is having problems. The company typically performs well during times of economic hardships. That says it. The retailer is drawing more shoppers with its pickup and delivery. Yeah, that's not what I was looking for. They're going after people. They think they're going to grow. There hasn't been major changes, but guess what? Walmart expects them to become more significant as the year progresses. So, we get a number today where PPI is negative, but you also have the CFO from Walmart, right, saying, hey, if you haven't seen price increases coming in May, folks, it's May 15th. He says they're here. If you haven't seen them, they're coming. It's a stark warning in terms of price rises. Yeah, they're probably coming. Guess what? They're not here yet, not for the PPI. But there you go. Walmart shares dropping. We're in negative territory about $1 now as we get the S&Ps off by 17. We jump around to some of the Magnificent Seven. Coming into the first break, we got Apple. 207 this morning. Microsoft slightly in the red as well. Tesla shares giving back $7 as well. Markets in the red. Stay tuned, folks. We got a lot to talk about this morning. We're coming back in 3 minutes. Don't go away. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger Zen. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger Zen, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Welcome back, folks. You take a look at the volume on the S&Ps, trailing off a bit since we got that acceleration on Monday, right? You come out of China, of course, some good talks of China over the weekend. You get the acceleration in the S&Ps on almost 1.7 million contracts, and then look at the lightness, man. I guess his lightness, look at how light the volume is. 1.26 million on Tuesday, 1.1 million. I mean, that's at the lower boundary that we've seen. Okay, and I keep going back. Nothing like the volume we saw on the sell side here as people got out of Dodge before it really hit the fan, as they would say. Now, speaking of it hitting the fan, Coinbase this morning. So, just casually telling people that, yeah, we got hacked. And they wanted $20 million. We think it might cost our company somewhere in the neighborhood of $400 million already. They received an email 4 days ago, that would be Sunday, from someone claiming they obtained information. Now, they got everything in here. And they're saying that Coinbase is saying that they detected the breach independently in previous months. It immediately terminated the employees involved. They had overseas employees were bribed. Warned customers whose information may have been accessed and enhanced its fraud monitoring. Now, I looked. I mean, I have a Coinbase account. I didn't get a notification. We'll get some more information about this, and this isn't going to tank this company. It's just part of doing business right now. But it is remarkable how they go over the fact that steal the account data for a small subset of customers, okay? No passwords, private keys, or funds were exposed, and Coinbase Prime accounts were untouched. going one more. But yes, this is the part I want to get to. Although passwords and private keys were not compromised, look at the data that went out. Government ID images. I mean, imagine people, they got pictures of your license on top of everything. You know, the last four of the social, that's out there everywhere. But, you know, Coinbase has my government ID. They do. I have an account there. You know, no controls whatsoever. And they're going to pay the cost of business. And hey, guess what? For a company like Coinbase, I mean, what are we pushing right now? Yeah, $250 billion company. It's the cost of doing business, unfortunately. All right, we got a lot of news happening this morning, folks. Let me tell you as we jump around. So we talk Walmart. We talk Dick's. They're buying Foot Locker for $2.4 billion. And boy, talk about trying to thread the needle, right? And that's not the one I wanted. I wanted this one. Trump asks Apple to stop moving iPhone production to India. Where's Apple going to make the phones? They're not going to make them here. Those are the memes that exist. They're not going to make them here with the type of employees that you do need. Nonetheless, right, this is Trump. I had a little problem with Tim Cook yesterday. Trump said in his conversation with Apple, chief executive officer in Qatar, he's building all over India. I don't want you building in India, upping their production in the U.S. Just one example of the constant headwinds, right? I see all these headlines coming out with Apple, and Apple's going to be okay. But boy, how do you navigate that one? Apple shares down a few dollars at 210 from 213. And then in the same context, right? This is, you talk about uncertainty. Trump says India offered to remove all the tariffs on U.S. goods. But he also says that Apple can't be making their goods over in India. And how do you navigate that one as the CEO of Apple? Talk about a tight walk. Yeah, we'll talk a little bit of tax bill as we get into this one. Oh, this is a great one. Okay, so Boeing. You talk about a run from these lows, man. Boeing, from that April 9th low of 140, and folks, there's sometimes you want to be watching charts, okay, and when all the bad news is baked in and it's trading lower, you know, it's oversold, right? If all of it's baked in on the upside, same thing. At any equity, I'd be a buyer at a certain price, I'd be a seller at a certain price. That's the way you want to think of the way these markets trade. Now, when you talk about companies like JetBlue, you talk about companies that might go bankrupt, you say, I'd be a buyer at any certain price, that number's just going to be way lower because of risk reward. Point being, right, Max Payne situation, Boeing's trading lower, they're still dealing with problems, they got a new CEO, China's canceling all their orders. What happens? Qatar steps in, and now you have a deal for 210 wide-body aircrafts is what it can reach up to, okay? That deal, $96 billion. How about that, right? Why not make it a cool $100 billion? Come on, right? What is that? How many zeros? Nonetheless, you're talking about $100 billion. Now, here's the kicker of this, okay? Bloomberg has a great piece out yesterday. All right, I was reading this last night. Boeing's problem is not orders. It's filling the orders. So imagine you put yourself into the position of being Qatar royalty, okay? And you say, let's just tell them we're going to buy 210 planes and we're going to give them $100 billion for those planes because guess what? It's going to take them 10 to 15 years to start delivering those planes. And we're not going to pay them a lot of money because they got a huge backlog anyway. So just tell them, sign the deal, we're going to buy. I mean, to a certain degree, that's what you have here. Now, I'm not saying that the deal isn't real, okay? I like Boeing. It's a big deal. The market's reacting to it. But yes, okay, you're talking about right now, they say it in the headlines, it would take the plane maker right now more than 9 years to chew through its backlog at the current output. But guess what? When you get further into the specific planes, I'm going to share this one in the den because this one is awesome, okay? If you share it, if you break it down to specific planes, right? Now, as I mentioned, the order's for 160 plus an option for 50 more, okay? $96 billion, although they state that number, they'd actually end up paying much less when you account for the fact that you get a discount if you spend $100 billion with Boeing. you probably should get a discount if you're spending $100 billion, right? But check it out. The company, 5,643 planes. And listen, I have some Boeing, okay? But you better realize what you're dealing with when you see orders like this, because it's quite a wake up when you actually break down the specifics and how they have to ramp up that production. And that's what they're going to try and do. But boy, 5,600 planes, okay? $460 billion in value is what they have in the future. It's not sold until those numbers come in. They're working to push that 737 MAX to a cap of 38 a month, okay? At that rate, it would take 9 years to chew through the 737 backlog of 4,200 planes. Now, they are trying to up that number to 42 a month. Folks, that's only 4 extra a month, okay? That's only 4 extra a month. They have 4,287 aircraft that are in a backlog. We're going to finish it up. The numbers are wild when you break it down even further. Yeah. How about the 787, which is what 130 of the Qatar orders are for? They're not for the 737 MAX. They're for 787s. We'll talk about those. How about 13 years? We're coming back for the open, folks.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. We have equities open. S&P is off by about 18. NASDAQ 100 went off by 102. Dow off by 148. And yeah, how about UNH? It keeps going, right? Criminal probe on UNH. What are we talking about, man? We were talking about this on Tuesday. Tuesday, correct. I got to back it up. 48 hours ago, the stock opens at 340, and it's like, hey, let's put it even again, right? Further than that, we got to go. Yeah. I mean, how do you step in front of that train, man? All right. Nonetheless, we got markets open in the red. We go back to Boeing for a moment. There you go. Boeing continuing to rise, up by 1.5%. Let's check in on Walmart and their numbers real quick. Woo, watch out, Walmart, down by 3.4%. The market, a little worried when you got a CFO going, I mean, right? Strong words. That's what I was talking about pre-market. You got a CFO saying, hey, if you haven't seen the price rises yet, they're coming. Whoa. Watch out. Now, Boeing. All right, these numbers, man, if you could ever run a business like this. So check this out. And it is remarkable how many headlines, okay? And this is on Bloomberg in itself, okay? We're reading the opinion piece. We're talking about it right now, which was out yesterday at about 4 in the afternoon. Great piece. Thomas Black, okay? Great piece talking about breaking down the actual backlog they have. But look at how you jump around. Boeing marks comeback from crisis with record Qatar deal. And it's quite a deal. Okay, that's out yesterday morning. It's updated yesterday from these two authors. It's like the same exact headline. Now, this is their newsletter, okay, but these are all over the website, everywhere. This one's out at 5:40. Boeing lands record Qatar deal in sign of revival, okay? So you get the good headlines everywhere, but you break down the headlines. As I just mentioned, 9 years to chew through the whole backlog. But that doesn't give you the whole picture. You really want to break it down plane by plane. Right? Because you can't just use how many planes they're producing, because they're producing a certain number of each plane a month right now. And the Qatar order, okay, 130 of the planes are for 787s, Boeing's newest wide-body aircraft that's currently flying. Right now, Boeing has 759 unfilled orders for this plane, not counting the 130 that Qatar just placed. The company is currently making 5 a month. 5 a month. I mean, folks, imagine if you're selling houses, right? Pick a big thing that you can relate to that you're selling. Airplanes is one of them. But imagine you're selling houses. Okay, we're selling houses. If you're in the market for a Florida house, folks, give me a call. Imagine you're selling houses and you're building 5 houses a year. It's a great business. Okay? Imagine if you were coming to the market and telling that market that you had 759 people that were waiting for their house, okay, and that you're very excited because even though you have 759 people that are waiting for you to build their house and you're building 5 a year, you just got another 130 people to sign up at the back of the line. The market would say, what the heck are you talking about, right? That's how they would say it to you. So buyer beware on those orders, man. A remarkable number when you put it in that context, right? To even think about that number. Now, listen. Kelly Ortborg, the plan to fix those production, yeah, they're trying to ramp up that production. Maybe you get another plant, boy. It takes a while to put together a plant that builds planes, okay, as in it's going to be years and years down the road. But that's 787, 13 years to get through that number. 13 years. Whew. Now, you want to tell you, this is a perfect segue, okay? So you talk about the debt, okay? We're talking about the tax numbers that are out there. And this is an interesting one when you talk about how the numbers are seen, okay? This has nothing to do with politics, folks, okay? The number on these tax cuts over the next 10 years is $3.8 trillion. That's the number that's being put out there, okay? Budget experts, they score that on a 10-year period, but what happens in here, okay, and this one's a great one from Bloomberg as well, is that you have many things, and this is both sides do it, okay? You put certain conditions in that all expire in 4 years, conditions such as no tax on overtime, no tax on tips. So as a result of that, when they score the tax bill coming up, okay, you only have to put in the cost to revenue for 4 years, because really those costs to tips, costs to overtime, that's only in there for 4 years. The numbers go back up. We start taking in that revenue again after 4 years, right? So that's how it gets scored. it's probably the best way to score it. Otherwise, you're just predicting the future, okay? But guess what? As we see is the case, especially something like no taxes on tips, no taxes on overtime, what politician in their right mind is going to come back in 4 years and run on the premise that we're bringing taxes back on everybody working more than 40 hours a week for overtime, and we're bringing taxes back on tips? So many things that are set to sunset after 4 years will likely be extended. And when you push that number out, you get a number that's like 5 point something trillion potentially, the number that gets added. Now, you back things up to good old, where are we? Are we here? Yeah, to ChatGPT, man. Okay, it's great. If you're not using ChatGPT, folks, all right, and you look at where we are, you know, you're talking about a number, okay? Yeah, that over a 10-year period, right, our percentage of debt as GDP, it's going up no matter what. Even without the tax cuts, over 10 years, we're pushing 150 to 160% percentage of GDP. Over with the tax cuts, you're pushing maybe 170, even with growth. So when you look at that type of a trajectory, and that number, folks, goes up to, by 2035, yeah, you're talking about a number that pushes that debt, you know, somewhere in the neighborhood of, even without the tax cuts, 53 trillion maybe. And you're talking about a number with the tax cuts of 56, 57 trillion. I don't know how that one corrects itself, folks. And I know tax cuts are going to grow the economy, but they're not going to grow it to offset that. And we're actually increasing the trajectory of the debt. And that's going to weigh, whether you're talking about, you know, I heard today, Jamie Dimon was on Bloomberg this morning. And, you know, talking about the debt. Listen, there's a very real possibility that you get higher for longer rates, longer term basis. Okay? And the easiest way to pay off $50 trillion in debt is with a weaker dollar. And there's some real action in play when you're talking about yields in the dollar right now, because we're approaching levels that something's going to have to happen, because as rates continue to rise, right, because they are, the 10 years at 4.5 right now, the cost just to service the debt, right, is a number that's going to have to get devalued. Why not? And how do you devalue it? Well, the dollar's been on a heck of a run, all right? But look at where we've been prior. Right? Look at where we've been prior. And there's nothing to say you can't go back down there. And boom, just like that, you wipe it out on a basis, on a worldwide basis, which is really all that matters. Floating around at this 100 price point, and look at this, right? Critical area for 10 years. You break above it, you push higher. You break below it, 90s in the next in the cards. We get the dollar at 100.75. Stay tuned, folks. We'll come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the direction. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey. Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. You have the S&Ps negative by about 14 points. We get back to a 5-minute chart. You see a little bit of volatility around the 830 PPI number. And yeah, you had Jamie Dimon talking this morning, but you also have Chairman Powell talking this morning about higher rates. Powell cautions about higher longer-term rates as supply shocks provide policy challenges. I would say so. We may be entering a period of more frequent and potentially more persistent supply shocks, a difficult challenge for the economy and central banks. Interest rates are likely to be higher as the economy changes and policy is in flux, right? Higher real rates may also reflect the possibility that inflation could be more volatile going forward than in the inter-crisis period of the 2010s. We may be entering a period of more frequent and potentially more persistent supply shocks. And yeah. You know, you combine that with the Walmart action this morning, folks. Heed the CFO's words. All right, look at that. Yeah, heed the CFO's words, man. Market's not messing around when the CFO comes like that. If you haven't seen the price hikes, they're coming. They're coming this month. Ooh, what? What did he just say? Yeah, Walmart down by almost 5% right now. Target shares down about 0.8% right now. We jump to some of the other retailers. TJX in positive territory. Can't hold this stock down, man. Rocket ship up by 0.3%. On the flip side of that, there it is every day. Kohl's down by 2%. Kohl's numbers at 796. We jump over to Dick's on their acquisition. Yeah, trading at session lows off $29, off 14% at 181.35. And on the flip side of that, Foot Locker trading right near the $24 that they'll be taking over for $2.4 billion. And how about HBO Max coming back from Max? No one quite understood it. I remember looking at the, whether it's the CEO or the man just running Warner Brothers, were just running Max. I remember an interview at one time, and he was talking about this. It just kind of happened, and they were going beyond HBO, right? They have sports on there. They have many different brands when you log into Max, and Max is great. But you know why Max is great? Max is mostly great because of HBO. That's kind of it. Now, listen, they get some sports. I'm pretty sure I was watching the Celtics last night on Max. TNT Sports, right? I watch a lot of hockey games on there as well. So they have this big plan, but they had the plan. And they realized, hey, guess what? Do you know when we get really an acceleration? Do you know when they do get an acceleration, folks? When they get big hits, like the White Lotus, right? Where everybody's talking about it, et cetera. It's not from drilling down into their variety. I mean, they even have CNN on there, okay? And if, you know, they have New Year's Eve CNN. There's certainly you want news CNN. So they span the spectrum, but they're going back to HBO Max, and probably rightfully so. There's only one HBO, and it's crazy to think about, folks. I remember some of those early, and I'm 45 right now, and I remember some of those early days of HBO. It's probably 8 years old, 9 years old. You're at home. I remember that intro, right? Because you only had 6, 7 channels in your house. Listen to me. And, nonetheless. Warner Brothers, down about 0.5%. Netflix shares up by 0.3%. Disney's been on a heck of a run, down 0.7 at 112 right now. Amazon giving back some of the gains, down by 2.2%. Apple down by 0.6%. Nvidia, quite a run as well, negative by 1.5%. Yeah, all these equities, just a little bit of a give back, right? Market's been up for a few days. AMD off by 1.6% so far this morning. We keep our eye on yields. Yeah, getting back yesterday's losses. All right. Look, we're up a solid 0.5 point right now from where we were towards the close of yesterday's action right now. Continued volatility as we got the 10-year, 4.48. The dollar at 100.80 right now. Gold holding up well at 31.91. And silver with a bid, almost to yesterday's low at 32.22 right now for silver. Let's jump over to crude. Dropping again. Great conversation with Teddy Kegstad yesterday. You know, look at that technical area, folks. Doesn't mean it's going to happen every time, but at least you get your back against the wall. Yet again, crude bounces off that $63 to $65 area. We peak out at 63.90 yesterday, and just like that, we're trading at 61.21. So we got markets rolling over just a bit. Yeah, we jump over to UNH. Whew, it's not stopping here, man. Look at that. So, yeah, the headline on UNH, and we talked about it, but it's not stopping. Criminal probe. CEO is gone. New CEO is in. They pull their guidance. It basically means anything could come out, right? Yeah, crisis without end. That's how I would surmise it as well, man. Yeah, in February, you had the civil fraud, okay? But, yeah. The Wall Street Journal reported the Department of Justice was investigating the company for Medicare fraud. And you better believe it, man. We've read the articles on this show before, right? On UNH, they got nurse practitioners showing up to people for services they don't necessarily need, overbilling. It is rampant. It's probably everywhere. And good, they're going after them, man. The insurance industry, you know, the articles have been written especially on them. Look at that drop, man. This is why you get stops in place, folks. You know, look at this nice technical area. You could have made a great case when this thing dropped from 600 to 450. This is the buy. This is the buy. And just like that, you're down to 260 like that, man. Market can always go quicker than you think, faster than you think, further than you think, folks. Let's back it up. I mean, you trade through here. What's next, man? $100? You get this consolidation area around COVID, and that's about it. And that's right where you're back to, at 260 for UNH shares. Jump over to Alibaba. They report some tough numbers, and they're trading low as well, off by 7.6%. Big profit miss is what the headline says there. And revenue, they were supposed to make 237. They make 236, and that's Chinese yuan. You're talking about 32.6 billion. Net income, how about that miss, right? 50% of what they were supposed to make. Yeah. You know, and that's where it's all about expectations, right? Net income is almost 300% higher than a year ago. But guess what? The market already knew that. They thought it was probably going to be 500 or 600% higher, because they thought net income was going to be 24.7 billion won, and he came in at 12.4. They got Alibaba trading down 7.8% right now. All right, let's jump to some of the home builders. Yeah, just can't find a bid right now. You know, maybe you get a little bit of a consolidation, but I'd be looking for a bid before we get into these. Lennar down another 0.5%, just chopping around at 107 right now. DR Horton, those are the two biggest ones, down 1.2. KBH down 1.1. Look at that, man. And this is how quickly. You were just trading on KB Homes at $58. You're trading at 53. You think the low is in? Just like that. 8% lower in a few days. And that's as you have the market ticking higher. All right, folks, S&P is off by 22. NASDAQ 100 off by 130. One more segment. We're coming right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. UNH shares down 17% right now, down $52. And here's what I'll see if I can find. So check these out. These are the articles I was talking about in my head. They stayed in my head, man, because you read an article like this and you go, how is this company not under criminal investigation for fraud? Okay? And 2 great articles from the Journal. Insurers pocketed $50 billion from Medicare for diseases no doctor treated. Okay? Now, that one was written in July of 2024. So almost a year ago. And then there's one from December of 2024. United Health's army of doctors helped it collect billions more from Medicare, okay? Presented physicians with checklists of potential diagnoses and then what they get from it. Now, this article in particular, okay, the one from July, talks about how, and I remember it because it was Boston, okay? And you have representatives from the insurance company saying, hey, why don't we send you a nurse just to come by and give you a checkup, and we'll give you $50 gift card. They're just going to come by and make sure you're okay. Says, sure. Well, they come back, they diagnose her with diabetic cataracts. Well, what does that mean? That means UNH gets almost $3,000 more a year because Medicare pays insurers more for sicker patients, okay? But yeah, she doesn't have that. Her own doctor later said, let alone anything caused by the disease that would resemble it. Folks, if I walked into somebody's house and said, you have this condition, we're going to tell the government you have the condition, they're going to pay me $3,000 more, I'm going to give you a $50 gift card, you better believe I'd be under arrest, and I should be, okay? And then you go through this article as well. It's over and over, and that's what they did. They had questionable diagnoses, and this article in particular, okay, it shows, you know what, I'm going to post this one in the den as well, because, man, they get $3,700 for a healthy person. Guess what? If you put them as obese, I went too fast. Morbidly obese, you get $6,100. Okay? Yeah. You add in all those conditions, you get it up to $16,000. Seizures, $2,000. Chest pain, you got chest pain? Sure, we'll add $1,200. They just diagnose everything and bill the government. Okay? But guess what? They probably crossed the line. And yeah, I'm speculating, but the stock market's saying they crossed the line this morning. Folks, thanks so much for kicking things off. Stay tuned for Basil. He's up next with the Tiger Technician.